Alright guys, so 6 o'clock on the dot, we're up and running. Hopefully the software updates I've kind of done are going to make the volume much better, along with the resolution on the videos. So I know some of you may not already be in the live stream, but I'm going to go ahead and start. It'll be uploaded to YouTube, so if you want to go back and watch it later, you are definitely going to have the opportunity to do so. So basically we're going to run over two hot stocks from Friday's trading. We're going to take a look at ZN and we're going to take a look at AVGR. On my screen right now, we're looking at ZN. And as many of you may know, and if you don't know, ZN just kind of took off like a rocket on Friday, and it made some really big moves. And these are the kind of stocks that we really want to be playing and we want to be looking at. So on our Sunday Stock Talk review, we're going to be doing every Sunday at 6 o'clock. These are the kind of stocks we're going to want to review. Okay, these are the kind of stocks we want to play, the ones with momentum. And the ones with momentum and a lot of people trading them are going to be the ones that have nice pattern setups, and that's what we really want to review here every Sunday is good pattern setups and good entry points. So we're going to take a look at ZN and we're going to take a look at AVGR. And to go into a little bit more detail, we're going to go into some entry points and some exit points along with where to properly put a stop loss if you were to get into some of these trades, along with how do we kind of just control the emotion behind trading. And that's going to be the tricky thing, is how do you as a trader control your emotions? That is one of the most challenging things to overcome and become very good at as a trader. And there's no easy way to answer it, and it's just something that you're going to build a confidence in yourself as a trader as you get better, is your emotions and learning how to just handle them and control them as best as you can. And lastly, there's been kind of a high request to go over why exactly I use specific time frames in trading, whether it be a 1-minute chart or a 5-minute chart or maybe a 10-day chart or whatever. So I'm going to go into detail exactly why I use specific time frames when I'm trading, and hopefully by the time we get done with this, it should all be very clear. So let's kind of jump into it, right? So right now we're looking at ZN, and as you can see, this thing just kind of shot up. Now following my cursor, I have nothing on my screen. I have no trend lines, I have no arrows, I have no entry points or anything like that, because I just wanted to go over it right off the top of my head and just show you basically, you'll get an idea of how I use Thinkorswim and how I kind of just maneuver my platform. And now you can start to realize what I do when I analyze a stock afterwards in hindsight and just kind of get a better idea of what I'm doing when I'm looking at these stocks, okay? So taking a look at ZN, we see that it just ripped and roared all day long. Well, the main question everyone's going to ask is, where's my entry point? How do I catch this big move? Well, for one, you have to already be watching the stock. By the time it hits your scanner that it's moving, it may be too late to get in on this play, but it's not too late to hit any of this, okay? So if you weren't already watching the stock, you would have a tough time, or if you didn't have maybe the correct scanner to notify you of this move, you may miss this move on time, but that's okay because there was plenty of potential to play it throughout the day. Now it just comes down to recognizing the patterns and the entry points. So the first one we're going to go over is on its first big move up. And I'm going to zoom in here. And we'll even zoom in a little bit more because we can do that. All we really need is this area right here. Okay. So starting from scratch, pre-market, this thing gapped up. Okay. It hit a high of about $4.68. If you've watched many of my other videos, I always preach that I like to play the breakout above a pre-market high, and that's where we tend to see a lot of these runners right in the morning as soon as they break out from their pre-market high. So let's draw this. The pre-market high is right here. If we draw a flat line across, that's basically where the stock ended up breaking out, is right here. That's where it finally jumped up. Not only did it break from its pre-market high and run up, there's a few other things that we could spot in here. And I'm going to go ahead and actually delete this, and we're going to take a closer look into this move. Okay, let me remove the drawing first. So if I zoom in more, okay, there's a couple of spots you could have gotten on. First off, the breakout happened right here. The breakout happened right here, where the stock finally moved up, okay? Not only was it the pre-market high, but if you noticed, this is a 1 minute chart I'm looking at, okay guys? So we're looking at a 1 minute chart. On the 1 minute chart, each 1 minute candle tells us a little bit of a story. So what do we have here? Right here we have, this is the breakout. You know, the stock moves up right here. But what do we really see? So first off, the stock finally breaks up and breaks out. That was the pre-market high. Right about the pre-market high, the stock finally broke out. Not only did we have that, once the stock sold down, you notice it started trading below its 9 moving average. It was holding what's in orange is my 20-day moving average. The 20-day moving average acted as phenomenal support. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 12 or about 11 candles all sitting on the 20-day moving average, holding great support. As the stock starts to move back up, it starts to get squeezed in between the 20-day moving average and the volume weighted average price. We finally get a break above the volume weighted average price. If you're not familiar with the VWAP, go ahead and check out one of my videos and it'll make it a little bit more, you'll understand a little bit more. So what we really get, okay, what we really got here is support on our 20-day moving average, and then we finally had the first green candle to break above all of the previous red candles, besides this one. This could also be your entry point right here. The break above the previous red candle, the break above the previous red candle, the break above all the previous red candles, okay? So that's what we look for when we're looking for breakouts. We're looking for breaks above previous red candles, the break above the high of day, the break above pre-market. We just broke out above the volume weighted average price. We noticed that volume was dead. Volume starts to pick up down here. Now we're getting this breakout. This is a 1 minute chart. I'm going to go ahead and I'm going to hop into a 5 minute chart. And that's what I'm talking about. There's an importance behind using 1 minute and there's an importance behind using 5 minute, okay? When I'm trading, and I'm a day trader, I typically use a 1 minute and a 5 minute chart. And the reason I do this is because sometimes patterns are not as noticeable on 1 minute charts as they are on 5 minute charts. On the flip side, sometimes 5 minute charts don't show setups as well as 1 minute charts. So it's good to have both 5 minute and 1 minute charts running at the same time, so that way you have the best opportunity to spot a potential breakout or a potential pattern that may be showing on a 1 minute chart that isn't showing on a 5 minute chart. You can also use later time frames like 20-day, 1 hour charts and all these different time frames, but those are going to be for different purposes, whether it be swing trading or long-term investing, okay? There's a purpose behind using different time frames and different charts. So for day trading, it's very good to use 1 day, 1 minute charts and 1 day, 5 minute charts. Not only can you use 1 day and 1 minute, but you can also use 1 day, 3 minute charts. So there's a variety of different styles you can use, but it's good to find out what works best for you. But for day trading purposes, it's typically 1 day, 1 minute and 1 day, 5 minute. Okay? So if I hop over to a 5 minute chart, let's just say you only were playing or only looking at a 5 minute chart. Your entry point on ZN to catch the initial big rip would be the first green candle to break above the previous red candle in the trading day. Look what happens, right? If you remember this strategy and you remember this as you guys are learning it right now, and you play the first green candle to break above the previous red, look what would have happened. You would have got in right here, and you would have been able to capitalize on close to, let's say you sold at the tippy top, you would have been able to capitalize on a 22% gain. To be honest with you guys, that is going to be very hard to do, to catch every single little bit of penny of the move. So realistically, you probably would have been able to catch somewhere around 15 to 20% if you were to be watching the stock at the right time and play the break of the previous red candle on a 5 minute chart, okay? If you played the break of the previous red on a 5 minute chart, you have been able to capitalize on 15 to 20%. Now if we go back to a 1 minute chart and we look at it here, you were able to get in on the move a little bit earlier, okay? And the reason I say that, and I'm going to delete some of these drawings because we're getting a little cluttered up here. And the reason I say that is, on the 1 minute chart, you get a little bit, you can hop in the trade a little bit sooner if you're able to recognize the trend. On the 5 minute chart, we saw that the first candle, which would be this one, to break above the previous red, was right here. So your entry point would have been 479. But if you were looking at the 1 minute chart, you would realize that A, we're holding support, B, we have this little resistance point of about 468. If you were to draw a trend line, I'm not going to, but if you draw a trend line from this candle here, it runs and it touches this guy and it touches this one. So we're holding this little itty bitty 1 minute support right at about 468. Your entry point on the 1 minute chart could have been the break above 468. Personally, I would not have traded the 1 minute break of 468. Why? Because the high of day is right at 479. So as soon as you hop in on this trade, you very well could have been shut down for resistance on the previous high of day, and then you could have just dropped back down. So the better play would have been right here at the break of the previous high of day, which is 478. And if you go back to the 1 minute chart, 5 minute chart, you'll realize that 478 is the high of the previous red candle right here, 478, 479. So to play that break, that was your perfect entry right here. It's 478, 479, okay, for the previous break of the previous red candle, okay? So that's kind of like what we practice doing when we're doing pullbacks, but this wasn't a pullback. This was just an intraday breakout on the high of day. So those are things you look out for, is high of day breakouts. And this was one right here where we caught on ZN. You notice our volume starts to pick up, okay? So we're running up. That is for one, okay? If we continue into the day, let's see what else we see here, okay? And not to mention, I forgot to go into something here. So your stop loss, okay? So let's talk stop loss for a second. On this is the 5 minute chart, okay? Let's talk stop loss on ZN. So, for example, let's say you're going to enter on the break above, the previous red candle or the high of day, which is 478. So you're going to enter in your stop loss, whatever you feel comfortable doing, right? Do you know that this is going to rip up, 20%? No, you have no clue. Did you know that it was going to go from 479 all the way up to 580, almost double itself? Or actually a little more than double itself, 585? No, you had no clue it was going to rip $1. But a smart play is always to set about a 2% stop loss. Or if you see that the stock has potential to go up 20 cents, then your stop loss should be 10 cents. The key for a stop loss or your risk management when trading a stock is always to have at least a 2-to-1 profit loss ratio. And what that means is, if I can put it in simplest terms, is, for example, would you be willing to bet $100 to make $100? That doesn't make any sense. That would just be making my money back. But it makes sense to bet $100 to make $200, or to bet $100 to make $500. Those are where you get into profit loss ratio. So it makes sense to, potentially spend $100 to make a couple $100. So speaking of profit loss or risk management, you always want to have at least a 2-to-1. And that's where you make most of your money. You don't want to get into a trade if the profit loss is only 1-to-1. That doesn't make any sense, okay? So when we're talking stop losses, you want to know based on, previous resistance points or previous supports. Now you can get an understanding of where the stock has potential to move. Something like ZN, it had no previous resistance. So, the potential for profit was basically limitless. It was limitless to the buyers and it was limitless to the sellers. So stop loss, I always go with about a 2% stop loss because on average, I aim to make 10% a trade. So here and there, you're going to have a losing trade. So if I'm aiming to make 10% a trade, then I'm completely fine with giving up 2% on a loss. Because if I can make a couple 10% winners each week and then I have a couple losers, then you're looking at a 2% loss. And if you do that 3 times, you're losing 6%. So let's say you took 6 trades, you had 3 10% winners, so now you're sitting up 30%, and you had 3 losers, but you're only risking losing 2%, so you lose 6%. Overall, you're looking at 24% on the week, which is really good, okay? If you go up 24%, that's really good. So having proper risk management is what's going to lead to being a successful trader in the end. So stop loss is something you're really just going to have to work on, learning where you can get in and where you can get out. And it's going to take a little bit of time. But the best thing I can stress on stop losses is to have a tight stop. If the setup is really good, you might be able to have a little bit more leeway on your stop losses. But I personally like to use about a 2% stop loss because I aim to make 10 to 15% per trade. Doesn't always happen. That's just the way it goes. Okay, so let's go back and we'll get back into looking at some of the patterns here. So back to ZN on some of the patterns. Right, we already covered our first one, which was the high of day breakout. The second one is the fact that it sold up, then it just dropped down. Okay, right here is not a good entry point. Right here is where we get a break above the volume weighted average price. Like I stated before, volume weighted average prices become support and resistance intraday. So when you're trading below the VWAP, it becomes a resistance. When it breaks above, we are now uptrending, and now the VWAP will be considered support. So this is what we call an intraday VWAP breakout, where we're trading below, volume picks up, we break above our VWAP, and we continue to run. Okay, then right here, we have a pullback, where we sold up, we got a little extended, we even had a pullback here, very small one, where the stock sells up, or gets bought up, now we're extended off the 9 moving average, the stock sells down, pulls back to 9 moving average support, and then we run again. So this is a perfect example of a pullback. If you wanted to get in on the stock and you missed it all day, your entry point would be right here on the first candle to break above the high of the previous red on a pullback. I have another video about pullbacks, but the resolution wasn't very good, so maybe I'll do another one. Okay. So we've gone over pullbacks and we've gone over the high of day breakouts. So the best thing I can stress here is when you're seeing a stock run up, and we're going to go back to a 1-minute chart. Okay, let's just go back to 1 minute. Now you see that things are not as clear. 1-minute charts tell a big story. There's a lot of price action going on and a lot of stuff moving, and it scares people, right? You know, let's say you got in here and then all of a sudden you see it drop. That's going to scare you and that's make you want to get out because you're going to think it's going to keep going. But if you've noticed, the stock has been holding good support right on the 9 moving average. So if you bought in, say right here, and then the stock sells down, it would be kind of foolish to sell right here. So let's say you bought in here, you go up here, you're holding. It'd be kind of foolish of you to sell right here because the 9 moving average is support. So why would you sell on support? The only time it would make sense to sell is if it breaks below the 9 moving average, and now you've broken support. Now your next line of support is a 20-day moving average. Well, the 20-day moving average, let's zoom in. Let's say, for example, we bought in here at, whatever. Let's just say we bought in at $5.40. It goes up, you don't sell, you're holding. Now we break back down, and now we're sitting at $5.38. It would make no sense to sell here because you're sitting right on the 9-day moving average support. If it breaks below, that would be a good time to sell. We've now broken through the 9-day moving average support. Our next sign of support would be the 20-day moving average, which is going to sit right at about $5.30, which is well below where you got in at $5.40. So now you're losing 10 cents a share. Here you're only losing 2 cents for the potential to make more if it continues to follow this trend. But if it breaks below the 9-day, your next support is the 20-day moving average. And you're going to be losing 10% or 10 cents, okay? So that's another thing to keep a lookout for. But like I said, on the 1-day, 1-minute chart, there's so much more price action that it becomes a little bit nerve-wracking, and that's why I trade with the 1-day, 1-minute and the 1-day, 5-minute, because the 5-minute chart, if we go back to it, okay, the 5-minute chart is much more clear. Okay, it doesn't look as scary. So right here would be a good entry. Where these 2 red candles are, we get this move up, right? So first we get our VWAP breakout, we move up. A good entry would be right here. The first 5-minute candle to break above the previous red, and we go in, and you have the potential right here to make 9%, 8% trade real quick. Then right here, we get the first 5-minute candle to break above the high of the previous red on a pullback. This one you have the potential to make another 10%, 11%, 12%, okay? So being able to recognize the patterns is what's going to make you a profitable trader. So if I didn't already touch on the importance of using 1 day 1 minute charts and 1 day 5 minute, I'm going to recap that a little bit. On 1 day 1 minute charts, sometimes the pullback patterns or maybe bull flag patterns or maybe breakout patterns will not be as easy to spot as they are on 1 day 5 minute charts. On the contrary, sometimes patterns occur on the 1 day 1 minute chart, but they're not noticeable on a 1 day 5 minute chart. So you want to run both so you can be sure you're having the best opportunity to spot these patterns, because it's more than easily to miss the pattern on a 5 minute chart as it is on a 1 minute chart. So by running both of them, you give yourself a much better chance of spotting a pattern in which many other traders are looking at, okay? So if I'm looking at 1 day and I'm looking at 1 day 1 minutes and 1 day 5 minutes, there's many of other traders that are looking at that same time frame. By looking at the same time frames as everybody else, it gives you a better chance to spot the same opportunities that all the other traders in the market are seeing, which is going to give you that follow through that you're looking for to make those big moves. Okay, so for the most part, we've covered almost everything except emotions. Emotions in trading is one of the hardest things to do, and this is the best way I can put it, right? Is we all know that greed is going to get the best of you. And the human brain is studied over and over and over and over, and there's still so much to know about the human brain and the psychological aspect that goes on in the mind that makes people do what they do, and we still haven't figured it all out. Scientists have still not figured all the stuff out about the human brain and the way it works and how it works and the way people do things the way they do. We still don't know all that. So it's better for you to understand yourself better. And that's why when it comes to trading, you have to honestly just throw your emotions out the window and you just pay attention to the chart. Okay? You pay attention to the chart and what is the chart telling you, and that's simply it. Okay? The trading is a game. When you have money involved, that's when the emotions come in. So you have to treat it as a game and you understand the patterns. And you stick strictly to technical analysis and understanding of what's going on right in front of you. Who cares about how much money you're making right now? Who cares about what we do? And we do care about how much percent we're up. But what we're looking for is, what is the market telling us? What kind of patterns are presenting? Does it look like it's going to continue to move? Just all these things, right? So emotions are what is going to screw you up when it comes to trading, because you're going to keep holding and holding and holding, and you're going to lose. Or you're going to keep holding and holding and holding when you're winning, and then you're going to get crushed on the downfall. So you have to be very careful on that. Now, getting out of trades, like your exits, that's a different story. You have to be better at reading level 2. But let's say you caught this move up. Let's say we've moved up from here to here, and you're thinking about getting out of the trade. Well, as soon as the first candle goes red, that's a perfect indicator. Let me get out. I've already moved up 10%. Why be greedy and try and risk making more? As soon as I get a green or red candle, just sell. You're already up 10%. For example, here, let's say you played this pullback and you went up, I don't know, maybe 8-10%. As soon as you get your first red candle, just sell. Stop being greedy and just sell. On the flip side, if you get into a trade and it starts going against you and it hits a 2% loss, just get out, okay? Because you can come back tomorrow and you can easily get an 8% winner, and now you're profitable on the week. You're up on the week. What's hard to do is be a profitable trader when you hold the stock and now you lose 5, you lose 10%. Now you have to go back the next couple days and at least make a 10% winner just to break even for the week. So by cutting your losses quickly and giving yourself a 1 to 2% loss, you make it much easier on yourself to become profitable, because you can make 10-8% winners throughout the week, and that's much easier to do rather than to recoup from 20% in losses. And it's just the same thing as homework. You slack off and you don't do your homework when you're in school, it starts building up, and now you have yourself this huge hole to get yourself out of, and it's much easier just to keep up with it. It's the same concept with anything, okay? So we've talked enough on ZN. Let's go over to AVGR. This is just another one that ripped all day Friday. Let's go into a 1 minute chart. The 1 minute chart tells us a little bit more than the 5 minute, okay? If you're not familiar with bull flag patterns, this one has a clear bull flag pattern that occurred, and it occurred right here. It occurred right there. So the bull flag pattern we have coming in is right here. So if you didn't catch this, actually I was looking at this right in the beginning of the day, and I'm going to go into a little bit later time frame, and I had this on my watch list and I just barely missed the move on it. But if I go into a 10-day 1-minute chart, this is where I put my entry point on this stock. And if anybody followed me on my live stream for that day for pre-market analysis, my entry point for the stock was a break above the previous high of day yesterday, or the day before. And if you notice, once we broke out above that price, we ripped up and we moved up almost 20%, actually a little over 20%. So that's another thing to look out, is we're looking to play the break above the previous yesterday or the previous day's high of day. We're looking to play the breakout of the pre-market. So pre-market, we got our breakout right here. Those are just simple patterns. Yeah, you missed a little bit. You could have got in here, but you missed a little bit. But there was really no clear indicator other than the fact that we sold down and we had the 200-day moving average as support, and then we started trending up. But there was no telling if we were just going to hit the previous high of day yesterday or the pre-market high and come back down. But once we got a clean break above the pre-market high and a clean break above the previous high of day on the previous day, look at that. We just run up and you could have hopped in, and now you're looking at about a 20% gain. Let's say you missed this move up. You missed the move. Well, be patient and watch the stock. This thing just ripped 30%. You don't think that it's now popping up on people's scanners? You think the move is done? Think about that. This thing just went up 30%. In the back of your head, you got to start telling yourself, well, it just went up 30%. Does it have the potential to keep moving? Of course, you just had it move 30%. It's probably now just hitting a bunch of people's scanners. So now you're picking up more momentum. You're picking up more people watching the stock. Now let's look to see if we have a pattern occurring. Right here, we have a bull flag pattern. And I'll do a video on bull flag patterns. But for now, what you need to know is we had a bull flag pattern right there. That was the bull flag. On bull flags, we're looking to see, is this stock going to continue downtrending, or is it going to reverse and break above its downtrend resistance point, which is right here? So my entry on this stock would have been right here. Once the stock broke above the resistance line of its downtrend in the bull flag pattern, your entry point should be right on this candle once we break above that high. You could have rode it up to here for a 10% mover. You could have rode it all the way up and you were making 30, almost 40% if you just stuck with it and rode it all the way out, okay? So like I said, if I were to get in this stock, my personal stop loss would have been a 2% stop loss, or it would have been a break below the previous red candle. If the stock would have broke below the previous red candle, that means we're probably going to continue downtrending. I would be out. But if it breaks above, we just ride it out, okay? It's simple as that. So this one had a nice bull flag pattern. I'll go into more about the bull flag pattern. If we go into a 5-day or a 5-minute chart, what do we have? You know, what are we looking at? On the 5-minute chart, things aren't as clear. You know, we don't really have a clear bull flag. We just have one big red 5-minute candle. The perfect entry point on this would have been to play the break above the previous red, right there. So if you're watching the stock on a 5-minute chart, you see it move up, you're like, oh man, I missed that move, I want to get in. Well, just wait for the stock to pull back. It pulls back a little bit, and you play the first 5-minute candle to break above the previous 5-minute red candle, and now you have your entry point to go long. I know it's easy saying it in hindsight, and it's harder to do right on the spot, but the best thing you can do is just be really patient. I mean, that's pretty much it. There's no point in jumping into trades and risking losing money when you can just be patient and wait for the right setups. That is the best thing I can stress, is to be patient and wait for the right setups, and as they come, you just nail them. That's pretty much what it comes down to. And that pretty much covers everything that I wanted to cover for today. Sure, there could have been a little things that I missed here and there, but we have plenty of Sundays to go for Sunday stock review, and I think, you know, just enough of these is going to get you guys up to speed. So I think I'm going to end it there. And obviously, as always, I appreciate every single one of you for joining in, and I hope that these are helping you guys a lot. So please give me some feedback in the comments and let me know, you know, if this helps you out, or what, you know, I could have gone over better in description or gave you a little bit better detail about. I really like to know the positive feedback or the criticism. That way I can make these a little bit more beneficial for even me and everybody else in here. So once again, guys, thank you for joining on the Sunday stock review. I had a blast doing it, and I'll catch you next week on Sunday. And if you're not familiar, tomorrow is Monday. The market opens again. I'm going to be going live pre-market and for usually about 20 to 30 minutes of the trading day. It just depends on how the market's going to react and how it's going to talk to me come Monday. So go ahead and join me tomorrow for the live stream. And once again, thank you all for joining in. And that's where we're going to have to end the live stream for today.